What's going on, y'all? January 22nd, guys. I just want to share something with you. Breaking news in the financial world. I don't think it's that big of a deal, but it is notable, and that is that the Dow Jones has broken 38,000. So we're seeing a new record high on the Dow Jones. This is relatively significant, understanding that really, we've seen the highest we've seen is about 36.3, somewhere in that realm, and we are headed up towards 40,000. You can see after hours, it is pushing a little bit, but this is pretty notable. For those of you who are thinking that, there's going to be this massive market bloodbath and everything is going to hell and there's going to be blood in the streets, like I've been trying to explain. I'm trying to kind of like get some people to wrap around this. I have some friends who, work with some pretty high level, individuals, and they're all afraid. They're all putting their money in cash and all their cash in gold and everything, and that's fine. I understand, but these are the same guys that have been saying it's going to crash for the last 30 years. And there will be different types of corrections, but I went kind of into depth on this, on what's happening. We're going to see a pullback. We're going to continue seeing some issues with some of the banks, the smaller banks. We're going to see eventually the Fed rate start to drop. We're going to start seeing, the real estate coming back to kind of what it was around COVID. We're not going to have the very low interest rates, but we're going to start seeing the economy getting a little bit stimulated here. Guys, this is an inflation marker, okay? And here I'm going to prove it to you, okay? This is very simple. I keep trying. There's like people who are so afraid they're not spending money. They think everything's going to crash. Look, guys, I've gone through this before. Okay, you want to follow the VIX. Okay, the VIX is down. Okay, this is the volatility index. All right, look at this. The volatility index is way down. Okay, so everyone who thinks there's this major crash coming. Okay, here was 2008. This was the volatility index, peaked almost at 80, right? And here's COVID, pre-COVID. Before everything started coming back, 66, right? So these massive spikes. Okay, guys, look, this is the volatility index. Okay, until there's a major black swan event, we're not going to see a crash. Okay. Now, could something happen in the next few months? Possibly. But I want you guys to understand that when you see major market changes, look at the VIX, understand what's happening, and don't panic. Okay. In this case, we've got the lowest volatility markers we've had in quite some time. So this is a very good indicator. And then on top of that, we're seeing this inflation. We're pushing the Dow 38,000. It's going to break 40. They've been, back when those initial rate cuts were happening, or the rate raises were happening quite a few years ago, there was a lot of people talking about how the Dow's going to break 40 or 50,000. And when that happens, the whole shift of economy is going to be moving in this inflationary pattern. It's going to be moving in this inflationary pattern, and it's something that's really important to take note of, because what we're seeing is the reverse of what everybody kind of thinks. And so I've mentioned this before, right? You guys have heard this saying: when there's blood in the streets, that's when the opportunity is. There's not really that much blood in the streets right now. The blood in the streets is the commercial, is these commercial investors who are over leveraged. That's going to be a situation, but it's not going to affect the retail sector in the same way. This is affecting the financial institutions. We're going to see some banks still having some issues that could, create a little snowball. But look, when everyone gets greedy, what is it? When everyone's fearful, get greedy. Everyone's been really, really fearful. I think it's a good time to get greedy, because the greed, which has been insane, and then that was the other thing. When everyone's greedy, be fearful. All right, a lot of people are not very greedy right now. Everyone's conservative, sitting on the sidelines. But we're going to see the same thing happen that happened a couple of years ago, which is this pushing the envelope, the pushing of the envelope up into a higher level. Right, everybody thinks, see right here, is slowly rising. There was a dip. Okay, it retracted, it recovered. Okay, retracted a little bit. It's recovering, and now it's going to go even higher. So that's the inflationary pattern. The inflationary pattern is going to show where the economy is going to continue to boom. Okay, yeah, there have been some job losses, but there's still, the job market is still strong. Wages are rising. There's all these factors that have to be taken into account, and that's why I say the biggest indicators. Look at the VIX. Okay, the VIX is down. Okay, let's see the 1 year chart. It's down. Started to pop up here a little bit, but it's down. And again, this is the volatility index. It's going to tell you how volatile the market is, how volatile things are. We haven't seen we just saw a major event here with COVID, and then we're going to see some spikes along the way, and there'll probably be another event, some mild spike, but we're not going to see this, guys. Everyone who's waiting for 2008 again, like you're just, it's not coming. So just needed to drop that in because I saw that we did have this this break 38,000. This is a key indicator. So maybe it's a good time to sell if you're in the stock market, but don't anticipate that there's going to be any sort of massive reversal here in the coming weeks. However, in the coming months, it's a possibility. I'm not going to rule it out. Again, nobody knows what's going to happen, but really, this is an indicator that we're going to see more inflation. We're going to see a steady economy. It's coming, guys. And if you're too afraid to invest now, you're going to really regret it when it comes time to invest, and then your asset prices are doubled because they are a victim of inflation. That's what I think is happening. Nobody knows. But again, I'd love to hear you guys' comments. Post the comments and tell me what else you want to know about.